Indiabulls Finance has reported its third quarter numbers, and I'm going to run you through just the basic numbers. First, we've seen the profit after tax figure coming in at 247 crore rupees. That's risen 22% year on year, and we're seeing income from operations rising as well, about 22% to 854 crore rupees. But how has the quarter been? Let's get some detailed perspective going from the management itself. We have Mr. Gagan Banga, CEO of Indiabulls Financial Services, joining in for a quick chat right now from Mumbai. Mr. Banga, good morning. Thanks very much for joining in, speaking to our viewers here on NDTV Profits. First off, give us a quick update on how the quarter gone by has been in terms of some factors that you'd like to highlight for us.
The quarter has been a milestone quarter. Our loan book has gone past the 25,000 crore mark. So AUM is now standing at 25,000 crores. The other key point has been that profit after taxes have touched the 250 crore number, which is a very, very significant development. The company has been projecting a growth rate of about 30%. And almost on all parameters, we have been able to successfully meet that number. Both on the loan book and the profit growth side, we've been able to exceed that number by a little bit. So that is also a very strong development for us. The other important achievement, so to say, has been that our return on equity, which we have been trying to get to the 20% ROE number, we've been able to achieve that now. And overall, the company is seeing a lot of stability over the last 2.5 years in terms of what it does on a quarter-on-quarter basis, both on disbursements as well as on spreads and profitability. So our asset mix now has been very, very stable at 70% retail mortgages, 10% commercial vehicles on incremental basis, and 20% of the book being corporate loans. So for the last 2 years, we've been able to maintain that, and going forward, this would be the ideal asset mix that we will have. Spreads have for the quarter come in at about 3.95%. We have been projecting and saying that through the interest rate cycle, our intention is to maintain spreads at 3.5% to 4%. And I'm happy to see that, as the interest rate cycle has peaked out, we have been able to successfully defend that number of 3.5% to 4%.
Okay, Mr. Banga, you were talking about the loan book. Can you give us a quick update on the loan growth outlook for the next quarter?
We, at the start of the year, had projected a 30% type of growth rate, which would mean that the loan book would be somewhere between 26 and 27,000 crores by the end of the year. And I'm reasonably sure that we should be able to get to that number.
Okay, you were talking about disbursements. We've seen about 3,600 odd crore rupees in Q2. What were the disbursements like in Q3?
In quarter 3, the number was similar. It was at about 3,600 crores. For us, the more important number is the net growth number. The company has been growing at an average of about rupees 2,000 crores per quarter. And that is the most important number, because that's what grows the book and grows the earnings. So we will continue to grow at about 2,000 crores per quarter for many more quarters. We have been growing at this rate for the last 2.5 years. So what we are essentially trying to target is a block of 4 to 5 years where we have done more or less the same thing per quarter, become more efficient on cost income, on our credit processes, on our NPLs, etc.
Mr. Banga, any change in spreads due to the changing loan book mix?
The spreads have been coming off. So while the loan book has increased, we have been saying that as the company de-risks further, the spreads will come off. Now we've kind of completed the whole migration of de-risking. This exercise started way back in 2009, and it took us 2.5 years to complete the exercise. So going forward, we should be successfully defending 3.5% to 4% of spreads, which is where we are also right now.
Okay. Okay, and a quick check of the debt to equity ratio. I guess at the end of this quarter, it was 4.7:1 or something like that in the last quarter.
Yeah,
right?
We carry about 6,000 crores of cash and investments in liquid debt instruments. If you would net that off, then then debt to equity is at about 3.7 times, which is very, very comfortable. It gives us a fair headroom to continue to grow without any further dilution requirement. We've also used the month of January for the first time to start raising sub-debt, which further augments the capital adequacy ratio and postpones any dilution requirement further. So we are reasonably sure that we should be, give or take, in the range of a little over 19% capital adequacy at the end of FY12.
Mr. Banga, thanks very much for that update there on business, and good luck going ahead for the next quarter. Thanks very much for taking time out and speaking to NDTV Profit.
NDTV's cricket app, Android and iPhone, fastest scorecard, special analysis, and much more. Download free. ndtv.com/apps.